Yo, what's up, traders? It's your one and only Forex skill coach, Team Legend, and I'm super excited having you all here today on this one. All right, today in this video, I'll be talking about something very important that a lot of you as traders ought to know, which is really rare to find topics like this on the internet. But due to this question has been coming to me quite a lot of times, that's why I decided that it is high time I talk about it and enlighten traders on this. All right, so today we'll be talking about a very important topic, which says early entries and late entries. All right, early entries and late entries. As a trader, it is very important that you be able to uh, enter into the market when the market is on the early stage. All right, you don't enter the market when it's on a late stage, because if you enter the market when the market is late, it simply means that you are jumping into the market like one who's jumping in front of a moving train. And that is one big reason why a lot of traders keep losing money in the markets. That is one of my biggest experience in the past. All right, losing money all because I jump into a moving trade, which is not meant to be. So right in this video today, at the end of it all, you'll be able to learn what it is to get into the market on time and what it also means to get into the market late. Right before I begin, if this is your first time on my channel, please do me a favor, smash the subscribe button, turn the notification bell on, because right here in this channel, what we do is to post wonderful and awesome contents that helps you grow in your trading career. Another thing you want to do is to make sure you follow me up on Twitter. Yes, that reminds me, a lot of traders have been asking, Tim, why not use Instagram instead of Twitter? Now, I've opened several Instagram accounts, and I always notice that once the account is beginning to grow, it gets banned by Instagram just for no reason, and I'm super tired of that shit. So I decided that I'll be using Twitter, because I can still do the same thing I do on Instagram or with Twitter. I can go live with Twitter, and I can tweet all my wonderful contents, analysis, even signals for you guys right on Twitter. So you want to make sure you join me on Twitter. My handle is right here on the screen at Bullish Bear FX, or you can go straight to the description and the link is there. The next thing you also want to do is to make sure you join us on Telegram so that you don't miss any single update. For the meantime, let's get started. All right, here today I'll be using volatility 75, all right, to give you a few examples, and then I'll also take you straight into my currency pair charts. Because when we talk about early entry, an early entry simply means when you jump into the chart when a new move has just begun. All right, the market gives you different moves. You have a bullish move, you have a bearish move. The same thing we all know as trend: a bullish trend, a bearish trend. So you only want to look for buying opportunities when you see a bullish trend, and selling opportunities when you see what? A bearish trend. Now, in the same word, I also want to let you know that it is important that as a trader, you jump into the charts or you jump into the trade selling when a new trend has begun for selling opportunities, or when the bears has just entered the market to sell. All right, so for instance, we have a bearish market. All right, we have a market going bearish. All right, you only want to look for entries when price has given you a pullback, because we already know how price moves. When it comes to price structure, price moves high, higher, low, higher high, higher low, higher high, higher low. All right, sorry, for a downtrend, we have the high, we have the low, we have the lower high, the lower low, the lower high, the lower low, and the lower high. And that's how a downtrending market moves. So as a trader who wants to catch the move, you only want to catch the move when a lower low has just been created, and on its way to a lower high. On the end of the lower high is where you want to look for your entry. Now, one big mistake that a lot of traders do is they get into the chart. They always want to jump into the chart when price is not done creating the lower high. All right, you see traders jump into the chart here, so some of them jump into the chart here, and that's not what it's meant to be. All right, some traders, even when they see price coming to the downside, they want to jump in here, they want to jump in here, which is really not safe. As a trader, you don't want to do that kind of a thing. All right, so what you want to do is to only look for your opportunities when you see price. You only want to look for your opportunities when you see price create the when price has just created a new lower high and is on its way going back down. Only then you want to look for your entries. So we are going to do that right now and see how it works. Okay, so let me give you a very simple scenario. We have price going low, lower high, low, lower high, low, lower high, low. Right now, you want to always make sure that you have your trend lines in place, that is having your supports and your resistance. Right, you always want to make sure that you have them in place so that you can know where to take your entries. Right now, price just created this low, created a lower high, created a lower low, which is lower than the previous low, gave you a lower high. As a trader, you only want to look for your early entries when price gets to probably your resistance, which was a previous support that just got broken, and price gets to resistance. You only want to look for your entry either here or latest here. If price has gone 5 pips away from your previous if price has gone 5 pips away from a new high that has been created, don't jump into that chart. Leave it. It has left. It has gone before you. Just leave it. Don't rush into it because you do not know, it might go against you. That is why a lot of traders always have this complaint of, oh, how come is it that when I enter the chart, the moment I entered, it went against me, took my stop loss, and the moment it hit my stop loss, it started going back down. Why is that? That is because you jumped into a moving train. You want to always make sure that if price has gone at least 5 pips away from your new high that was created, do not jump into it. Allow it to move, even irrespective of how it moves. Sometimes you're gonna see it move even deeper and deeper, and it's gonna keep telling you, hey, jump in, jump in, jump in. Do not jump. You have to learn to be a disciplined trader. Don't jump. Always have this at the back of your mind that this is Forex and Forex never closes. It means that if I miss this opportunity, I must get another opportunity anytime soon. If you don't find an opportunity in this chart, you can always find another opportunity in another chart or in another instrument. All right, so if prices move 5 pips away from your new high that was created, do not take the trade. Allow it to make its move. All right, so you might likely see it make a new lower low, and once you see a new lower high being created, you should be getting ready, and your eyes should always be on that resistance or on the support that was broken. All right, you should have your key levels all set in place, and once once price gets to your zone, look for your entry instantly without delay. All right, look for your entry and make sure that your stop loss is right above that support that was broken, that has turned to resistance. Your stop loss have to be right above it now, and you have to make sure that you have a higher take profit level. Do not ever go to the market risking high to make low, or risking high to make high, or low to make low. You must always make sure you have this stick to your mind: risk low to make high. What do I mean? Always go for higher risk to reward ratios, like 1 to 2, 1 to 3, 1 to 4 and above. All right, anything 1 to 1 risk to reward, I don't want to go for it, even to the extent that nowadays I don't even like to go for 1 to 2 risk to reward. I always go from 1 to 3 and above. That is what you should do as a trader. All right, so once you take your entry, your first entry here, and price goes for you, you have caught an early entry. And if price ended up maybe trying to play around with your emotions, because the big banks or those moving the market already know that a lot of traders are looking to take entries around that zone, so they want to play with your emotions. All right, they might even likely want to go to hit your stop loss for a little while. All right, but don't get it twisted. If your stop loss is hit, no problem. That is where your risk management comes in place. All right, I think I'll have to make another another video concerning risk management in the nearest future. If you want that video, you can always leave comments below, and I will know that you want it, and I will make it for you. All right, so that's where your risk management comes in place. Now you're risking, let's say you're risking $10, and your target is about $50, right? $50 is what you're targeting. That is you having a 1 to 5 risk reward, and that's cool. All right, so now your stop loss was hit and you lost $10. Cool, that's not a big deal. What you want to do is to wait. Now, one mistake that traders do is once their stop loss have been hit, they want to enter again immediately from there, thinking that that's where the move will begin. No, you should always make sure you stick to your key levels. All right, I have here to be a previous support before, and it has turned resistant. I will only look for my entry once price comes back to my key level, because if price ended up crossing my key level and went up here, there's every scenario that it might likely want to go back up to probably retest the previous key level. So that is why you always want to make sure you are disciplined. Don't revenge against the markets. Now, I've given you a cool example of what an early entry is and what a late entry is. Now, what about we get into the charts and talk a bit about it right on the charts? For instance, here in volatility 75 index right now, I just jumped into my chart, all right, because I already had all my analysis set up here and there, all right, and I was expecting to look for an entry around here, but I noticed that I came in when price has already made this move. Right, as a trader who is a beginner, he will likely say, oh, it's moving, let me sell immediately. Come on, if you trying to sell, is really dangerous. Right, it's really dangerous because you don't know what's gonna happen next. You don't know if price might likely decide that it wants to take this level right now, which is a support, which was a support. You don't know if price might likely want to take here now as support to go back up, which you don't want to see yourself running through those emotional trauma. So the best advice is stay out of the market, let it do what it wants to do. Yes, it has moved before me, no problem. If you will end up coming back, then cool. All right, if you end up coming back, then cool. All I will need to do is to just wait to see what price is really up to. So it might likely want to come back here, and once it comes back here, I know that for sure that whenever it comes back up, it's really going to find issues on this zone, and that might be an area where I might likely look for opportunity to take the sell. Once it comes here, all right, I will look for my early entries, probably believing that price would likely have to break through the zone. All right, and I'll look for my sell from there. So as a trader, you always want to make sure you have your levels in place. I always tell this to my students: you set the trap and let price come to your trap, and then you catch it. Don't go in front of a moving trade. Okay, so at this zone, I'm not going to take any sell. Even though I know I was looking for sell, I'm not going to take any sell. I'll allow price to do what it wants to do, get to my level, and I will know what next that I will have to do. It might likely play around and go back up to this level, and I will see that as another opportunity to take a good sell, because that is what we call a double top that it probably will create for me, giving me more confluence to sell when it ever gets there. And in that same way, I'll take you straight to my chart using the Euro USD. all right, using Euro USD right now. I will show you a little example of what I mean when I say look for your trade early. All right, so right here right now, let's go straight. Now, for instance, I was looking for a selling opportunity right here, okay, and then I just jumped into the charts and I saw price here, right? As a trader, what I want to do is to know if this is an early entry or a late entry. Now, how do you really know if it's an early entry or a late entry? If you're planning to risk $10, all right, and you said to yourself, okay, I want to place my trade here. If you place your trade here, where is your $10 stop loss going to be? If your $10 stop loss is not above this resistance, don't take that trade. It means that's gone far beyond your willing your risk willingness. All right, you must always make sure you have your risk willingness, like how much you're willing to risk. So if you're willing to risk $10 and price, you saw price here right now, and you want to place your stop loss, and for instance it turns out to be that you don't have anywhere to hide your stop loss, because you always want to make sure your stop loss is on a safe zone. All right, now we can see that this is when price came here, it got resisted, it went down, it came here, it got resisted. This simply means that this zone is safe for me to put my stop loss if I want to take a trade. So if I decide that maybe I want to risk just let me say I want to risk just $100 right now. Okay, I want to risk just 100 pips, and I want to always target 200 and 300 pips above, right? So right here I have 128 pips. If I take it down to 100, let's see, 100, just 100, I just need 100. Okay, I think I'm just gonna set it up manually here. Okay, so I just want to risk 100 pips, and I want to target as high as 400 pips. That's 1 to 4 risk to reward, and that's cool. But look here, if I take the entry from here right now, I'm not safe. Look where my stop loss is. Price can easily get here. All right, I only want to look for entries that I know that is like somehow like this, which I know that my stop loss is right above that zone that is serving as resistance for the markets. Only then I will know I'm gonna take my entry. So if I met price here, is gone far away already for me, because my stop loss is not on a safe zone. So all I'm gonna do is to leave it. All right, so I will look for another entry when price comes back to any of my key zones. So let's play and see how price plays. Now price is really going deep down, yes, no problem, but I will have to keep waiting, because one thing is fact, price will surely come back to me someday. All right, so now I have another support and resistance created somewhere around here, right? Cool. So I have to take here as another key level to look for an entry in case if price comes to it in the nearest future, because I can see it served as it served as support, it served as resistance here. That simply means it's a cool zone to look for entries if price gets to it for a sell, right? Now I'll just keep playing on and see how price plays. All right, so that was a very typical example of what we call late entry. All right, late entry on that zone, and I didn't take it because it's not safe for me. Now price has come back to a new key level of mine. Here was support, right? Here was kind of support in the past. Here was support. Price found support here and broke out, now has turned to resistance and is not far away from my willingness to risk. All right, or my risk willingness, right? Cool. Now I have my stop loss right above on a safe zone. So what I'll do is to take the entry, and let's see how it plays. Now you can see exactly what's happening. Price is actually trying to get into my stop loss. This for you to know how the market plays against retail traders. A lot of traders right now would have maybe some traders would have put the stop loss as little as that because they don't want to risk so much. All right, and you see that little risk would have taken some people's stop loss off. All right, so that is why it's very good to catch the entry very early so that your stop loss will be very, very safe. All right, so imagine if our stop loss was right here, this should have taken us off right now. So at this zone already, we can see price is actually doing well, and is by this time you should have broken even if you desire to break even. All right, and you see how price keeps going deeper. So what is this video all about is to tell you that you need to look for safer zones to put your stop loss, and for you to be able to get safer zones to put your stop loss, you need to get into the market when it's on an early move. Once it has gone beyond your willingness to risk, don't rush it, don't trade it, stay out of it. I hope this video made sense, traders, and I would love to see you on the next video. You can comment what video you want me to do next, and I'll be super excited to do it. For the meantime, stay safe. Make sure you like, please, because it helps me understand that you really love what I'm teaching, and I'll keep doing more to enlighten you guys even much more. Stay safe, keep winning.